Welcome to your January 2023 real estate market update. And there's a lot of potential buyers and sellers out there that have, to a certain extent, been sitting on the fence. They're wondering what in the world is the real estate market going to do, and what does 2023 have in store? I mean, even the experts don't seem to agree. The opinions are split. Is the market sitting on the edge of a cliff? Has the market already bottomed out? Is things going to get better as we move into spring? Well, in the market report this month, I'm going to focus on two key areas, and that's mortgage rates and home prices. Those are the two biggest factors that have been driving the market. So let's jump in and see what the latest data says right now. Hi, this is Andrew with the Andrew Smith team here in Frisco, Texas. And the people I've been talking to over the last few weeks, especially, have all had the same question. We're coming out of 2 years of just the best real estate market that there has actually ever been. And we all knew that things had to slow down or things had to change. What we experienced at this time last year was not sustainable. That's not a surprise to anyone. But what happened, home prices soared dramatically. And then we had mortgage rates spike. So the idea behind that was everything was going to ground to a halt. The market was going to be devastated. Home prices were going to come tumbling down. We were going to be facing a crash just like we did in 2008, if not worse, as some people said. So what's actually happened, right? And, since that time, if you followed any of the videos I've done previously, you'll know that here in North Texas, we saw home prices drop quite a bit over the summer and then kind of tread water. Things kind of, evened out. You're going to see a lot of reports in the media about home sales being down compared to last year. Yes, they are. You're also going to be seeing inventory way up compared to last year. It is up compared to last year, but is it up compared to what we would normally see? We're going to touch on that in just a little bit. And then obviously mortgage rates. Mortgage rates have been one of the key things that people have been focused on, rightly so, because as mortgage rates soared, homes just simply became unaffordable, created a great deal of uncertainty, and that caused a lot of contract cancellations and people to back out, and buyer activity to go really, really slow all the way through the fall, which is why you're seeing those reports in the media about the pending sale number being down. All right, so what are we talking about with mortgage rates? Well, it's kind of interesting. Mortgage rates more than doubled last year, which has never actually happened since records have been kept for mortgage rates to go up that quickly. And as you may know, especially from some of the previous videos that I've done, the Fed is raising the federal funds rate, which impacts car loans, personal loans, savings accounts, things like that. It doesn't directly impact mortgage rates, long-term mortgage rates, not directly. It can influence, but it doesn't directly impact them. Long-term mortgage rates are tied into the 10-year Treasury bond, right? And we can actually kind of see, and we can kind of plot out based on that bond where mortgage rates are going to go. So let me share my screen with you here and show you exactly what it is that I'm talking about. All right, so this graph that we're looking at here goes all the way back to 1972. And as you can see, in general, the average spread between the 10-year Treasury yield and the 30-year fixed rate mortgage is 1.7% or 1.7 points, whichever way you want to look at it. And this is true all the way up through 2020. Well, why does that matter? Well, let me show you. Right here, it would make you wonder why mortgage rates right now are not 5.5%. Because if you look back in 2020 and 21, that spread 1.79 would have given us a mortgage rate of 5.28, or did give us a mortgage rate of 5.28 before they fell to those record lows. But right now, that yield or that spread is 2.79%. So mortgage rates are pushing 6.5%. Whereas if they were following the historical trend, mortgage rates right now should be right around 5.5%. But they're not. So why is that? Well, the reason for that is due to panic. right? It's due to uncertainty out there in the marketplace, in the mortgage industry. There's been, as you can probably relate, there's been so much uncertainty about what's the economy going to do? Where is all this going to go? Is the housing market going to crash? Is it not going to crash? Are we facing a recession? Is this going to happen? Is that going to happen? It's just created a lot of uncertainty. And whenever there's uncertainty and there's panic, it causes the spread between the 10-year Treasury bond and the mortgage rate to increase, right? So as you can see right here, we peaked back in November and we've been falling ever since. That kind of correlates to what we've seen with regards to home buyer activity, right? We've actually started to see since November, late November, after Thanksgiving through, buyer activity start to pick back up. And we're starting to see, as you probably know, mortgage rates fall. And right now, because there's less panic, there's less uncertainty, that spread is starting to come back down. And the expectation amongst most of the leading experts is that that is going to continue as we go further and further into 2023. Bankrate.com, or one of the people out there, they're forecasting that mortgage rates are going to be in the low fives to about 5.25 by the end of this year, which for anyone looking to buy a home is obviously great news. Here's what Lawrence Yun, the chief economist for the National Association of Realtors, had to say. He said the upcoming months should see a return of buyers as mortgage rates appear to have already peaked and have been coming down since mid-November. As I just said, here in North Texas, we've actually seen that. We've seen an uptick in activity. As a matter of fact, in the new construction space, we saw tremendous activity in the latter part of the year, especially December and the last 2 weeks of December. The number of sales being reported by the builders has outpaced what they normally see for the end of the year. As a matter of fact, the sales manager that I spoke to recently said there are so few inventory homes remaining, they're actually starting to get multiple offers on those inventory homes right now. And the amount of people out looking has been absolutely mind-boggling. Blew me away when I was out looking at new construction communities, how many people were out there. And with that in mind, and with what the latest numbers from the housing market are showing, here's what David Stevens had to say. He's the former Assistant Secretary of Housing. And he says, so be advised, this may be the one and only window for the next few years to get into a buyer's market, even though we're not technically in a buyer's market currently. And remember, as the Federal Reserve data shows, home prices only go up and always recover from recessions, no matter how mild or severe. Speaking to my mortgage partner recently, she was actually telling me that they've seen a large influx in about the past 30 days now of mortgage applications coming in from investors. So investors are starting to look at the current market and the way things are as an excellent opportunity for a long-term investment. We're not talking the massive run-up in prices where you saw a lot of investors jump into flip properties, but these are investors who are looking at long-term investments in real estate. I saw an article in Fortune magazine last week as well that said large hedge funds are building up a war chest to buy as many single-family homes in the next 12 to 24 months as they possibly can, as they think the long-term prognosis for real estate is very, very good right now. Now, I don't say this to convince you one way or the other what you should or shouldn't do. Only you can make that decision that's best for you. I'm just simply sharing the information that I'm seeing here in my local market, and also what I'm reading and seeing about what some of these big investors and other people are doing. Now, with regards to home prices, why are they saying that? What are they looking at? You know, the media reports keep talking about falling home prices, and the forecasts for the coming year keep getting revised. Here in North Texas, we actually saw quite a large drop in home prices last summer, but by the end of August, that price drop had stopped. That's when our prices essentially bottomed out. they've been treading water. They've been relatively flat ever since then. As a matter of fact, in Frisco, they actually ticked up slightly in December. I don't read too much into that because inventory remains really, really low. Last week, I put a link in the description to this video below, but last week I did a video all about home prices in 2023 here in our local Frisco and Prosper markets, where I dive into it. But the essential piece to say is that home prices are always a result of supply versus demand. And when mortgage rates spiked, we saw demand fall off sharply. That led to widespread speculation that inventory would grow, supply would go up, and prices would fall. But what no one expected was that supply to fall as fast as it did. And it's quite simply, many of the homeowners out there who didn't have to sell just decided not to. And they were pulling properties off the market. The home builders, new home builders that already had properties in the pipeline or had contract cancellations, when buyer activity started to pick up again, late November, they saw those properties sell, which is why many of the local builders reported very solid, in some case, I wouldn't say record number, but very solid, stronger than normal sales to finish the year. Right now, this next week is going to be key, because this is the time of year when we usually start to see the first data sets come out that give us an idea on what we should expect heading into spring. I can tell you that here in Frisco and Prosper, inventory is still falling, albeit at a much slower pace. It looks like we're about to turn the corner and inventory should start to pick up again, which is completely normal. Nationally, inventory this week actually showed its first signs of ticking up slightly. That indicates that the pattern's returning to a more normal pattern. And what has surprised many is that home prices themselves have remained fairly stable. They haven't dropped quite as much as people thought. And right now, in the next week or so, if the new property is coming, if we start to see that turn and go up just a little bit, that would be a sign that the real estate market may have bottomed out already. This will vary from market to market to market across the country, but it's just a sign. I definitely think that's the case here in Frisco and Prosper. I don't see pricing dropping further. We've been relatively flat, and I could see pricing remain flat or even tick up ever so slightly. But we'll stay tuned, and we'll keep updating everybody on that as new data comes out. As always, hopefully this helps you make the decision that's best for you. I've got a link to my market report in the description below. From that market report, you can research the latest trends and activity for any zip code or city in the entire country. I invite you to do that. And as always, if you have any questions whatsoever, please don't hesitate to reach out. You can schedule a call with me from below, or you can try and catch me right now at 469-296-5230, or send an email to andrew@theandrewsmithteam.com.